Hey folks, David Frost, MyStrategicForecast.com. You are here for another episode of Common Sense Market Analysis. Today is Tuesday, February 26, 2015. You're looking at a daily chart of the SPY, and basically, all in all, it was mainly a flat day. The S&P was down 3 points, Dow was down 10 points. That's flat. The NASDAQ was up 20 points, and the NASDAQ we're going to get to in a minute because we're approaching that all-important psychological level of 5,000, but we'll get there when we get there. Just give me a second, and I want to go through the S&P because what we've been doing is, and you know I do my calculations and such on the S&P E-mini, so I'm just going to flip over to that for a second. And on the daily chart, you see this purple line that shows up, and this represents the level I've been giving you all week long, which is essentially 2107, 2108. Any hourly close below 2107, 2108, and sustain that way would lead to lower prices. And as long as the market could remain above 2108 on an hourly closing basis, that would put the market and remains in a bullish position, okay? So let's go over to the hourly chart, and you'll see where that purple line comes in play, if we can get to the hourly chart. Okay, there we go. Nope, that's the SPY. Let me go to the hourly E-mini. There you go. Okay, so this purple line that I drew across represents the high from Friday, okay? The high from Friday was 2108, okay, right here, all right? 2108, all right? So as you can see, on Monday and Tuesday, right, this is Monday and goes into Tuesday, the market dips below the 2108, tries to sell off, can't do it, rallies back, touches the line, falls back, touches the line, falls back, finally busts through the line, and now it's above the line. Test the line, right above it. Come down, break the line, next hour, shoot right back above it. Up, above it, come down, break it, next hour, right above it. Okay, and that's what happened today. And then this afternoon, we closed just above the 2108 number on the pit session, it's called, which is basically normal market hours, only the pit session on the S&P E-mini closes at 4:15 p.m. as opposed to the stock market that closes at 4. And then it opens back up again and trades on the Globex throughout the evening and then switches back over to the pit session tomorrow morning. So anyway, that's our number, 2108. As long as the market remains above 2108, it remains in a bullish position. Now, I understand everybody that happens to have a bearish tint in their mind about the market and thinks we're higher than we should be and the market should pull back and it should sell off and all that stuff. I understand that. I agree. It should. But that doesn't mean it is or it will. It doesn't matter what we think. It matters what the market is doing. We just do what the market tells us what to do. That being the case, let's go back over to the SPY. We'll look at the daily chart. All right. Let's flip over to the daily, if we can get there. Okay. And, basically, there's nothing wrong here. I mean, could this be a signal of a topping pattern, this little doji day? Nah, not really. It's not a topping tail. It's just a little doji candle. It just means that we had basically an inside day or, it wasn't an inside day. It was a narrow day, narrow trading range, finished at the open and close were about the same. And then today we had basically another narrower trading range, tried to make a little on the downside, but then at the end of the day, the market rallied up into the close as it normally does. Where are we going from here? I have to think that this high here from the 18th of December, 212.97, is our upside target. Today, or yesterday, as a matter of fact, the high was 212.24. Okay, that was yesterday, and then today we didn't quite get up that far, but that was only 50 cents or 75 cents away, or roughly 75 cents away. So I have to think that we're going to get there within the next day or so. The other thing I wanted to make mention of is when you look, and I brought up the NASDAQ before, but when you look at the NASDAQ, okay, I mean, you're so close to 5,000. You're 13, 12, just over 12 points away from 5,000. You have to believe we're going to get there. I mean, if you look, this is a daily chart. I mean, this is just relentless. The market is making a run, or it's making a march towards 5,000. It's just down here, okay, on the 11th of February, okay, we were at 4,800. We're almost 200 points on the NASDAQ higher than we were 2 weeks ago. Okay, that's just not normal behavior. Therefore, I just think it's like a magnet attracting the market to 5,000. Whatever the force is you want to call it, it doesn't make any difference. It seems to be happening right before our eyes. So we let the market tell us what to do. We'll wait around. It'll give us a signal. It'll give us a tipping point. And that's why I don't normally catch tops and bottoms, but I do catch the right direction most of the time, because I'm waiting for the market to give me a signal. And what that does is it gives me the higher probability that I'm right. If I try and guess and say, well, the market should go down over the next week or so, that's not good enough, because it doesn't always act as it should. It just acts as it is. And what it is right now is in the bullish position. And until proven otherwise, we're going to treat it as such. Okay, let's move on. Let's go to the gold market, and I'll bring up the gold futures contract. And as you can see, let's go over to the intraday, because it's a little bit more interesting when you look at what happened overnight. Okay, this is, where are we? This is overnight. Okay, all of a sudden at where is overnight? Or over here. So yesterday the market started to climb late in the day. In the after hours session and through the night, the market put in a high up here at I think it was almost 1220. Let's see, what was it? High 1219, 1219.90. Okay, so about 1220. And then we sold off a little bit, but still finished positive on the day. And if you look at the bigger picture, which is the daily chart, okay, you could see that the market's trying to carve out a bottom in this area here. So we've had tried to rally, sold off, but still finished positive the other day. Similar action yesterday and today. This is actually will be Friday's chart. So this is today. This is yesterday. But what you're seeing is the market try and carve out a bottom. So let's get to the brass tacks. Remember I said that as long as the market remains above and remains to close above 1190, 1191 was the number, okay, then that remains in a bullish position. We went down and tested that number twice, okay, and basically bounced off that number, never closed below it, and therefore I believe that puts the market in a bullish position, and I think there are higher prices ahead. You're just going to have to wait for it to play out. In other words, you got to be long through this one, because the gold market is a little bit volatile. It's a little bit interesting in that you can have big swings, but a lot of times you'll wake up to a big swing. Certainly it can move throughout the day, but a lot of times you'll wake up and go to your computer early in the morning and you'll find gold up $20, $25. That happens a lot when it's getting into a bullish position. That's where I believe it is now, in a bullish position. We almost had one of those this morning. That could have easily been a rally right up into these moving averages at 1228, 1230, basically, but it didn't happen. We'll just have to, keep our eye on it, wait and see. But I still think it's worth owning it here. I think it's in a bullish position, and I've been pounding the table in gold for a number of weeks now. So here we are, and I expect higher prices in gold. Let's go over to the oil market, and oil, we also have a number on, and oil got somewhat bludgeoned today. And what was interesting was, let's go to the hourly chart, because what happens is, again, just like the S&P E-mini I gave you, the number of 2108, on crude oil, I gave you a number of 4970. Where's 4970? Right here. Okay, this is 4970. Okay, and you'll see that each and every time we come up, we test 4970 here. Okay, reflected it or rejected it. Okay, we came and tested 4970 here, rallied above it, tried to stay above it, couldn't do it, failed, stayed below, came back up, tested it again, shot back up, liked it, follow through, back down, couldn't hold it, right in here, 49.70, okay? We came down, we stopped at around a little below 49.7. We tried to rally back up. Whoop, an important number, rally back up, fail, hourly close below, have a nice day, market sells off. And it had a pretty good sell-off today, all the way down to Pierce $48. We were down at 47.80. Okay, so you can see where the 49.70 is ultra important, and I've said this before, and unless we continue to stay above, close above, hourly closes and then daily closes above 49.70, the market will be weak. Closes above 49.70, we remain in a bullish position. But if you're long something like that, what do you do with that number, right? If you're long the market, the oil market, and you know that number, okay, and you bought it out here on a breakout, okay, where's your stop out? Your stop out is an hourly close below 49.70. That's pretty much what it would have been. And in here, had you set a stop out when the market rallied up, you would have trailed the stop, okay, and you probably would have got stopped out on the way down somewhere in here over $50 for sure. So at least you wouldn't have got the total gain, but you wouldn't have taken a loss. So that's a little bit of Trading 101, and I'm going to make some more videos on this, different trading techniques and things like that. I've been getting requests on that, so I think it'll help a lot of people out. So I'm starting to make a list, and I'm going to put together a series of trading videos, and hopefully you folks will benefit from that. Real quick, let's go over to the TLT, and then we'll give it a wrap tonight. TLT, if we go over to the daily chart, okay, remember I said TLT was forming a bottom here. We rallied up, and then yesterday I told you that we're probably going to stall out and pull back. Today we pulled back, and that was after we came into the 50-period moving average. 3 up days in a row into this little bit of resistance area here. You got a moving average sloping down, 20 moving average sloping down, 50 moving average act as resistance. The price was repelled, so we had a little bit of a pullback today. You may get a little bit more pullback tomorrow, but all in all, I think this level should hold, and I think we'll see higher prices in the coming weeks ahead. But that's my current latest take on the bond market. This is the TLT, which tracks the longer-term 20 and 30-year Treasury bonds. If you want to just take a sneak peek at the interest rate, here's a daily chart of the interest rate market. This is the 10-year interest rate, which is the most talked about, most prevalent. It's 2.016. Basically, it's 2%. This is an after-hours quote. I'm sorry, the after-hours was 2.06. 2.16 or 2% 0.16, 16 basis points. Sorry about that. I got a little tongue-tied. Anyway, here's a picture of the interest rates, and they can come down a little bit further, but I think that, as I've told you before, I think we're looking at a generational low in interest rates that was finally put in, and I'm not looking for lower rates. If we come down and test these lows, that's another thing, and if we break the lows, then I'm wrong. But for now, I think that the low lows should stick, and I think it's a generational low. All right, folks, I think that should give it a wrap tonight. I'm David Frost, mystrategicforecast.com. Hopefully it's been helpful. And thanks for tuning in for another episode of Common Sense Market Analysis.